YouTube, what's up everyone? Welcome back to the show. Look, a major institution. They just accidentally leaked the clearest roadmap of who's gonna win in 2026. And the names on that list, well, they're not the ones that everyone expected. So before the whales finish front running this move, you and we are about to break down exactly what they just exposed and why this could be the biggest opportunity of the next 2 years. Stay with me, everyone, because this is the moment you're going to look back on and say, that is when everything changed. As always, make sure you subscribe to the channel and hit that thumbs up. The more thumbs up we get, the more YouTube will push out this content. It is the ultimate way to support the channel. So let's start with this. This is what kicks the whole thing off, because the institution that just tipped their hand, they weren't subtle about it. No. They particularly handed retail a cheat sheet. I like cheat sheets, folks. So imagine this. Stay with me on this. Imagine you're standing on the beach. The tide starts pulling back. People look around, they look confused. Seagulls get quiet. Your gut tells you something insane is coming. And then boom, a tidal wave hits. This is exactly what is happening right now with crypto ETFs. And Franklin Templeton, known as Frankie T around here, they just told us who's standing directly in the path of that wave. Their newly expanded Franklin Crypto Index ETF under the ticker EZPZ. Love it. It is basically a neon sign, just flashing, folks. Just keeps flashing, getting your attention. They said that these are the assets that institutions are ready to pour millions, even billions into, and the lineup is freaking insane. You ready? Get your pen and paper out. Bitcoin, Ethereum, Solana, ADA, Chainlink, Dogecoin, XLM, and last but not least, XRP. This isn't random. These aren't guesses. These are assets that the big money wants exposure to before the next macro cycle kicks in. If your crypto project has or is gearing up for an ETF, bro, it's game over. Everything on that list you should be looking into. They are telling you where the big money is going to enter, folks. This is like you turning your coin into a Black Friday item at Walmart. Every retirement fund, every wealth manager, every boomer with 5 million a trust account, suddenly they get a nice, clean, regulated add to portfolio button. And when money gets an easy button, folks, it presses it. We all know that, and it presses it freaking hard. Think about it. Bitcoin's ETF launch, we saw billions fly in with zero hesitation. Now imagine that, but times 8. People keep looking for that next 100x gem. Why? You got institutions who are telling you exactly which assets they plan to 10x through brute force, through capital injection. And here's the crazy part. We're early. Again, me and you are early, because the real liquidity wave, it hasn't hit yet, man. It hasn't. Here's the website, the Easy Peasy. You gotta love the name Easy Peasy, right? You gotta love it, man. It's up 15%. I mean, come on. They are telling you where the institutional money is going. Now, if that got you excited, it got me excited. This is gonna make you freaking angry, because it exposes exactly how retail gets played every single cycle. CNBC went on air and they said there's no reason why Bitcoin is down so much. They couldn't think of any reason. Not one, except maybe manipulation, which they can't talk about that, right? They're not even allowed to say those words. And let's be real, that's exactly what's happening right now. This isn't my first rodeo, it's my third rodeo. I know what they're doing. Maybe when I first got into crypto, this would have got me all shook up. You know what I mean? Not now. Just a few months ago, the entire financial media machine was screaming, Bitcoin's the future. Crypto is the next global system. Well, ask yourself that question. What changed between now and then? Nothing. Nothing changed. Listen.
Bitcoin down 5.6%. I haven't got a clue why. I presume someone smarty pants out there will say it's because of some forced liquidation. It's because of so and so, so and so. But when an asset class can move so aggressively, and I haven't seen any decent copy, and I'm going to say this, on CNBC, on the FT, on Reuters, on Bloomberg, on every one of those major market sources out there. I've seen no one coming up with a conclusive idea of why a major asset is down 6%. That, for me, is the problem with crypto. The fact that random events can move so aggressively and no one's got a clue why.
So look, nothing at all, okay? The tech didn't break, the demand didn't collapse. It actually picked up the demand. The fundamentals, they didn't disappear. But you know what did happen? Let me tell you. BlackRock, Fidelity, State Street, they doubled down buying the dip while retail panic sold it to them. This is classic. They manufacture fear, they shake out the weed hands, they accumulate, they then flip the narrative and they pump the order books. It's the same playbook. It's just a new cycle. You're not crazy, folks. You are being outplayed by people who treat markets like chess instead of roulette. And here's the truth that CNBC won't say out loud, but Rip will. Crypto isn't falling because it's weak. Crypto isn't falling because it's dead. It's falling because it's valuable. And whales want it cheaper. That's the dead honest truth. And look, speaking of sacking during manipulation, if you're not building a tax-free crypto position, you're leaving money on the table. I use iTrustCapital, my partner in crime, because it'll let you buy crypto inside of a retirement account. Tax-free, no monthly fees, and the interface of it is stupidly simple. Remember, iTrust doesn't hold your crypto. Coinbase institution does, Fidelity does as well. If you want to stop letting the IRS eat away your gains every single cycle, check it out. My link's down below, and hey, if you use my link, you fund your account, you get a free $100. Ain't nothing wrong with that. Now let's talk about this one, Bitnomial. They just broke the market structure wide open. If manipulation is the game, then this is the moment someone just changed the rules. Bitnomio, a CFTC regulated derivatives exchange. They're about to do something that no one's pulled off yet. They're launching a spot crypto trading under CFTC oversight. You heard that right. Do you know what that means? Well, if you don't, let me explain it in human language for you. This is like someone unlocking a secret level in Mario. When suddenly all the coins are worth 10x, you get a spot offering plus CFTC regulations, institutional access, stricter oversight, higher liquidity, massively reduced counterparty risk, and easy onboarding for big funds that were previously blocked. Look, this is like opening a door that's been welded shut for over 10 years. And behind it, what do you find? Fresh capital, big capital, smart capital. This is why your ETF issuers, your custodians and liquidity providers have been circling like hawks. They knew this was coming. They're not stupid. They know what's coming before me and you do, everyone. We are entering a future where crypto isn't just alternative finance anymore. It is finance. But up next, what I got for you, it's something even bigger that is happening behind the scenes. Because when money and regulations move at the same time, guess who shows up? The Fed. That's right. Stick with me, folks. This is going to get wild right here. Get ready, man. This is where the puzzle pieces are all about to snap together. So the Fed injected $11.25 billion, bringing their monthly total to $49 billion. Yes, $49 billion. This is the biggest liquidity injection since the pandemic. And you know what happened right after that injection, right? I tell you all the time. Bitcoin went from 3K to 69,000. Stocks, parabolic. Everything went vertical. It was absolutely insane, folks. It was just everything was green. You couldn't stop looking at it. This is liquidity, the oxygen of the markets right here. When the Fed increases the money supply, assets that move fastest, crypto, they react first. Historically, every time liquidity runs hot, Bitcoin outperforms every asset class on Earth. But here's the kicker. They're doing this before the 2026 cycle even starts. So that means a couple of things here, right? They're preparing for massive refinancing waves. They are preloading liquidity for election volatility, or they are quietly supporting markets before a global liquidity crunch. Any of those three, it's bullish. This is a win-win for all of us. All three together, forget it. Forget about it. As we used to say back in New York, right? A mega bullish nuclear detonation bullish event coming. That's it. That's all you need to know. But we're not done here because we got the Fed who went to the chat. Guess who else is coming in? Yeah, if you guess Congress, you guess right. If the Fed lighting the fuse wasn't enough for you, well, Congress just threw gasoline on the fire. A new Bitcoin strategic reserve bill was introduced. Let me say that again. A new U.S. Bitcoin strategic reserve bill was introduced. The U.S. government, what do they want? They want more Bitcoin reserves. This isn't El Salvador. This isn't a tiny island nation. This is the global reserve currency issuer saying, yeah, we might want some more of that Bitcoin on our balance sheet. This bill would allow taxes to be paid in Bitcoin, eliminate capital gains tax on Bitcoin, and formally recognize Bitcoin as a strategic asset. You cannot be bearish on Bitcoin after this. You just can't. This is the exact moment where gold had back in the 70s when the US began accumulating it quietly. And what followed? Well, I don't want to be that guy, but I'm going to be that guy. A multi-year super cycle filed. But this next part is where it gets spicy because ETFs, they're not stopping with just Bitcoin. That's right. Let's keep this momentum rolling, folks, because now we're heading into this shouldn't be possible, but it's happening anyway territory. And I like that territory. The CBOE, they officially, let me blow it up for you, approved for a T-Rex 2x long XRP daily target ETF. This is coming under the freaking Exchange Act of 1934. This is legacy regulation being bent to make room for crypto. But why does that matter? You're probably like, Rip, what does this mean, bro? Why does this even matter? I'll tell you why. Every time a leverage ETF shows up, it means that the market is preparing for a couple of things: higher volatility, higher liquidity, and higher institutional interest. XRP has been waiting years for this type of signal, and now it's here. This is exactly how the Bitcoin ETF approval started. Small hints, technical filings, and then the floodgates fly wide open. You think ETF issuers stop at Bitcoin and Ethereum? Nah, they're here to tokenize everything. But Section 7? Well, my friends, that is what's up next. And that is where we are about to talk about the future of the entire crypto economy. Now look, we just covered ETFs and laws, but what if the person who's controlling interest rates becomes a crypto ally? How does that sound? Because there's a 77% chance that Kevin Hassett becomes the next Fed chair under President Trump. Why does that matter? Well, because Hassett is openly pro-rate cuts, anti and extremely pro-innovation with digital assets. Translation? I'll tell you. If he becomes Fed chair, strap in. The crypto market could experience its most liquid environment ever. Lower rates, looser liquidity, ETF inflows, regulatory clarity. That is the recipe for the mother of all bull markets. And just when you thought things were looking unstoppable, I want everyone to pay attention to what's going on over in Japan, because that is your ultimate twist. This is where everything ties back in. Everyone saw the crash, but no one understood the real cause. Bitcoin dumped, all nukes, 785 million got liquidated in hours. People are frantic. The bull run's over. Chill. Just chill for a second and listen to the damn video again, and you'll understand it's not over. The real answer, it came from the most unexpected place: Japan's bond market. Japanese yields, they hit levels we haven't seen since the late 90s. That is important because Japan has been the global source of cheap funding for decades. Low rates in Japan, investors, they borrow the yen cheaper. They invest globally, liquidity flows everywhere, crypto thrives. It's that simple. But what happens when yields rise? No one asked that question, right? Well, the carry trade collapsed like a wet cardboard box. So investors, what do? They buy the yen. They sell their crypto, they sell their stocks, and they de-lever fast. That's why Bitcoin dropped first. When Bitcoin drops, it brings the altcoin market down with it. So your short-term volatility, expect it. Expect your markets to stay choppy until the beginning of next year. Altcoins remain super fragile because they follow Bitcoin. But long term, this is one of the healthiest reset patterns before a mega cycle ever, because leverage leaves the system and fresh capital replaces it. Your markets are always healthier when leverage is out and you got fresh capital jumping in and replacing it, folks. Look at everything we just covered. ETFs expanding, institutions accumulating, the CBOE approving leveraged XRP products, a Bitcoin reserve bill, massive Fed liquidity being injected. Bitnomials bringing regulated crypto products to the market. We got a pro-crypto Fed which is almost guaranteed at this point to be stepping in, and a global liquidity shock resetting the system before the real bull run even starts. Folks, this isn't noise. This is a blueprint, a once per cycle map of how capital is quietly positioning for next year. Let me remind you, next year is 30 days away. And you know what the media won't say, right? They won't say what institutions won't tweet and what most of crypto Twitter won't understand until it's too late. You're early again. Now make this one count, folks. I hope you enjoyed